Talk a little bit more about that very thing, about the pressure that maybe you guys have felt over the last couple of years as a Bitcoin-only business, where you may have left some short-term profits on the table, but you're focused on the long term.
Yeah, I'd say early on, we launching with Bitcoin was a clear choice. It was a very, very easy commitment to make, and we did. In fact, part of our history is we supported Ethereum for a little under a year. That's as collateral for loans, and that took a lot of effort. There's a lot of technical effort that went into that. It made our team uncomfortable with how kind of unstable some of the infrastructure was there, and what it took to develop a smart contract we thought we could be comfortable with. But at the end of the day, it was never also really that much of a market success, not anything that really put much of a dent into our loan book, or was never a major piece of our business. And so it told us a couple of things. It told us that there's probably not a lot of ROI in supporting other things, so just from a pure business rationale, and as well that the risk, we were just kind of uncomfortable with that. So maintaining the focus as a team, as an organization on Bitcoin, I think has really helped solidify our culture, solidify our market, and who we actually appeal to and who we want to work with and build a loyal client base with. So there's a sound business decision to that. As well, there's, I think, first principles, philosophical, good reasons to expect that Bitcoin is going to be a reserve currency of the future. It is going to be that foundation on which you can, dependably, even though there's a lot of volatility and variance in the price of it, and bear and bull markets can be quite wild, that it's still a long-term trend line and a long-term place to build a business. And we get stronger every year that we're in business. We get better and better at how we deliver services to clients. And so we expect the bull markets and the good times to get better and better, and the bear markets or times that are not so active in client loans and trading, that those will always kind of reset at a higher basis. So I kind of want to maybe cover one or two, and I think just as well that the kind of principles that operate within Bitcoin, again, about how important, or how much clients kind of value keys and holding keys. I think that was another kind of signal, or why, for instance, within the Ethereum version of our product, there wasn't the same market penetration. There wasn't the same kind of pickup or client interest. Within Bitcoin, it's kind of always been there. There's that kind of core idea within the community of sovereignty, of holding your own keys and its importance. So that's always resonated. And so there's a lot of aspects of why that's made sense. Other things about our business, like the lack of rehypothecation. I want to say that was another big one that had us, you get the VC pressure, investor pressure, or others as you're out talking to the market, why aren't you supporting more coins, and kind of with their logic there, but also why aren't you, lending out the collateral you're taking from clients? We did deliberate a lot. I think we had a really solid team, throughout our history that, a lot of the perspective that kind of came out at the end of the day is just too risky. That you are taking someone else's asset and you are lending it out, and you're lending it out into a market that's, as we've seen now with how these things are going, it's very interconnected, it's very opaque,
incestuous at times.
Incestuous, yeah, crazily so, right? Yeah, just like what it's like, yeah, all the retail outlets that were doing this, from a Voyager to a BlockFi to anyone, they're all lending the same people. They're then lending the same people. It's like really something that those dominoes are all quite close to each other. And so I wish I could say we looked at every balance sheet, or we came it was just for us a very surface level fact, or kind of an obvious fact of hey, this is just not a market that you should feel comfortable putting client assets out into. And that did mean our loan interest rates would be higher. Did mean that we had to turn down business, and we turned down even some of those funds of people that would come to us trying to borrow Bitcoin. And so it was just one of those kind of sounder decisions we made that really helped us as well kind of weather the storms last year and come out looking really strong. Being a lender, you still trust in a place that the observation I think is very poignant too. It's like a lot of those places, as a Bitcoin price is crashing, as the client's collateral value is declining, they're getting margin calls. And so if you're getting margin calls from BlockFi last summer, are you really wanting to cover? Are you really wanting to post more Bitcoin into that black box? It just doesn't sound like don't know that you want to trust that. You don't know what that the outcome of sending more Bitcoin into that scenario is going to look like. Unchained, with this really strongly segregated idea, idea that the collateral is always the client's and it remains in the box, the place it was put in at the start of the loan. You can always feel comfortable topping up on your margin calls. You can always feel comfortable putting more Bitcoin in there and keeping the loan safe, protecting your principal, and not losing further coin. So there's these kind of sounder business practices that come out of trying to do things right with a long-term perspective. And it may not always be the shiniest, biggest logo in the block in some periods, but it's a sound model and builds a lot of trust with our clients.